Hello, welcome to the monthly update for Genesis World Capital. We're going to be reviewing the status of the various state of the market. Crypto market has been in the news, which may or may not be a good thing. Let's talk about correlations, how the crypto market is correlated with the wider financial market. What is the market sentiment right now? The issue with Terra Luna has been in the news lately. We're going to do a deep dive into what actually happened and what is our plan. If you look at a correlation over the past 20 days as opposed to 200 days, you see that a lot of the assets in the last 20 days are highly correlated compared to if you take a longer period of time. And that has affected the crypto market as well. Right now, we are in high fear in the crypto ecosystem. The Bitcoin, the crypto fear and greed index, it's an index to measure the overall sentiment in the market. So green is there is a lot of greed, and orange or the orangish trend or brownish trend is more fear. Right now we are at 10 or 12, so it's very, very high fear in the market. Was triggered by a couple of things. One is the overall financial market, what's happening with the Federal Reserve increasing the interest rate, and with the war that is going on and the uncertainties around the war, and specifically around the depeg of a stable coin called the UST, which is in the Terra Luna ecosystem. So there is very high fear in the market right now. And what happened with this UST, which is a stable, it's part of an ecosystem called Terra Luna, right? So what is Terra Luna? Terra Luna is a smart contract platform, and there were two tokens associated with it. One is UST, which is an algorithmic stable coin, which is pegged to the value of $1. Now, algorithmic stable coins are stable coins where the value is being maintained by an algorithm. It means more stable coins when the value goes above $1, and it starts burning more coins when the value goes below $1. So it just like manages to keep the value around $1. And Luna is the native currency of the Terra ecosystem. UST value depegged, and it's currently trading around 10 cents or so, and it's been fluctuating. Luna went from $86 at a 99.9% drop, so it's almost zero right now. We do think that Luna will come back. The blockchain has been halted, and they're going to restart it at some point in time, but for all purposes, Luna has gone to zero. So how it all started was back in March. Terra Luna bought about $1.5 billion of Bitcoin to kind of give additional backing, asset backing to its stable coin. And when there was no backing, it was trading at $1. And then when they bought about 1.5 billion, which is say roughly around 20% of the overall market cap, then people started questioning, hey, it's only back 20% in assets. How is this coin really trading at $1? And so someone made a short attack on UST. UST was shorted, and we still don't know the entity behind it. There have been a couple of rumors, but it's all speculation. What we're going to talk about here is actually based on data and some assumptions. It's based on some on-chain analytics. We'll also talk about on-chain analytics later on in this particular update. And an attacker built about $1 billion OTC in USD positions. So that was done separately. And simultaneously, what happened was that LFG, which is the Luna Foundation Guard, that's a foundation which is formed to make the Luna ecosystem better and promote the Luna ecosystem. They had removed about $150 million of liquidity in preparation for moving that liquidity to another pool, right? So this attack could have been only done in that 1 week period. It couldn't have done before, couldn't have done after, because they removed the liquidity. So when the liquidity was removed, the attacker drained about $350 million to drain the Curve liquidity pool. Curve is another platform to trade stable coins. And after that was done, they dumped about $1 billion of USD into the market on Binance. When you have such amount of high pressure, it caused the initial depeg. Once the initial depeg happened, then it was a domino effect. and LFG starts selling Bitcoin to defend the peg, and the price of Bitcoin goes down because they're selling about $1.5 billion worth of Bitcoin, and the price of that Bitcoin dropped about 30%, and it's roughly trading around $30,000 or so as we speak right now, little less than that. And when everything was said and done, the attacker made about $850 million of profit in the trade. But the bigger impact to the ecosystem, it wiped out about $200 billion of market cap across the various ecosystem. And that is what happened. And that created a whole bunch of kind of a domino effect. Others started taking money out of the ecosystem. And there is leveraged money. So you can actually collateralize crypto and be able to take a loan against it. And then once the value started dropping, you started having margin calls, and then it creates like a domino effect. So that is what happened in the entire ecosystem. So what are we doing about it at Genesis? So first of all, we don't hold any algorithmic stablecoin. We do hold some asset-backed stablecoins, and they are pretty safe in the sense that each token is backed by $1. You can redeem it at any point in time. And that is deemed to be safe. Even that stable coin that is backed by collateral, there was some debug that was happening because of the wider market fear. Personally believe that the market is overreacting to the Terra issue. Yes, it was one part of the equation, but it's a very spot of the overall crypto market. And other coins that had nothing to do with the Terra ecosystem have gone down in value, right? So we hold Beefy, which is one of the ecosystem. It had nothing to do with all the stuff that was happening that has gone down in value. So many other projects, they've gone down in value because people are overreacting. Most people don't understand this entire ecosystem. And we are now looking to add other crypto coins to our portfolio, specifically things that are generating revenue. And we want to do some cleanup to sell some of the tokens that have not been doing well. So that is how we plan to navigate this ecosystem. But taking a step back, if you look at what's happening, right now Bitcoin trading, roughly around $30,000 or so, 29,000. And we do expect the market to drop down. NUPL is the net unrealized profit loss. It's a metric that goes between kind of capitulation and greed, right? So on the upswing, it goes capitulation to hope, to optimism, to belief, to euphoria. And then on the downside, it goes greed, denial, anxiety, and fear. So that's the entire cycle, human emotions. And Bitcoin can go down further, maybe to $20,000. I don't know. People don't know how things are going to evolve in the future. It can go down in the short term. However, that is good for the overall health of the market because most people in the ecosystem do not understand cryptocurrency. They do not understand Bitcoin. The way Bitcoin goes, the entire market goes. That's why we use Bitcoin. And all of this is on-chain analytics. On-chain analytics, fascinating new area, never been possible in the financial industry before, of the movement of these individual assets, right? Movement of these individual securities and how people are moving. So there are a lot of data that we have by reading the blockchain information and being able to analyze it. So if you look at the long-term holders, overall trend is the long-term holders are increasing, right? Right now, this graph, the amount of coin that is being held is on the x-axis on the left-hand side. So right now, long-term holders are holding about 13 million Bitcoin or so. And these are people who are long-term holders are defined as people who are holding it for more than 155 days. And there has been a lot of studies that have done around it. So once people start holding a particular coin in their wallet for more than 155 days, then they hold it for a long period of time. And you can see that in a bull market, right, like the long-term holders sell into a bull market. And into a bull market, this is typically smart money. People are selling the holdings reduced going into a bull market. But the long-term trend over a long period of time is on an upswing. So if you look at what happened in 2017, a lot of these long-term holders started selling, and then the price went up all the way to 20,000, and then the market dropped. When the market dropped is when the long-term holders are starting to accumulate again. So you see this trend over and over again. It's almost like taking candy from a kid. The smart money takes the money away from the retail investors, or the dumb money in which people don't understand how this ecosystem evolves. And you can also see that in the short-term holders, right? Short-term holders are mostly speculators. They don't understand what's happening in the entire ecosystem. And they kind of buy in whenever there is a bull run. Long-term holders, they sell into a bull run. Short-term holders, they buy into a bull run. So short-term holders during the 2018 bull run, they were holding 6 million tokens at that point in time. Right now it has dropped, and you can see that it's about 3 million Bitcoin or so is held by the short-term holders. So this is really good of being able to flush out some of the short-term holders in the ecosystem, because the next leg up, right? Once we are not in the kind of bull market yet, the next leg up, once Bitcoin crosses about 40,000 or so, we're going to see the next bull run, the next leg up, and these short-term holders would have sold in and would not have allowed the market to ride. So this is overall good for the health of the ecosystem, for the price to increase over the long period of time. Yes, it hurts in the short term, right? It doesn't feel good to see the portfolio go down in value, but this is a long-term assets. We have talked in the previous updates how this asset class, especially Bitcoin, is going to hit $1 million by the next 10 years or so. So our prediction for Bitcoin hitting $30 million by 2032 still holds. So nothing has changed in that narrative. And what has happened in the short term is people not understanding it and going out in fear. So our thesis still holds, our narrative still holds on the long-term basis. And so having said that, thank you, and we'll see you on our next month update. Bye.